All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I thought I'd do a little bit of a different video here this afternoon, and I am jumping on early, but this will be posted by the normal video time. But thought I'd do something just slightly different here. During this whole pullback and everything, I've been showing kind of where we're seeing a little bit of divergence in a few names. I've showed you kind of some of the positioning that I've done, and one of the things that happens when I start showing things like that is, people start to read into it. If Jeff bought one thing, obviously he thinks just the market's going straight up, so let's just go buy everything. But that is just simply not the case. And hopefully most of you understand that, I do fully understand there's more downside risk in this market than what there typically is, even after such a big fall. So I thought this afternoon I'd go out and change the tone a little bit, and let's talk about the case for panic. Now, before I give the full case here, please understand that I realize this could happen. I'm not sitting here saying it will happen. I'm not sitting here betting on it in a big way or anything like that. But this is the case. This is the bear market case for everything going on out there. And to all the naysayers out there, they say, coronavirus, no big deal. Look at everybody who's recovered, right? And you've heard me say that. I've been on video and said, look at the death rate compared to the recovery rate. You could take a look at, a simple flu virus or something like that, and it's worse data than what we see with this COVID-19 virus right now. But we miss a lot when we sit in that mindset of, it's not a big deal. Because the reality right now is there is some global panic that is going on with the coronavirus. Whether we want to say the panic is warranted or not, that doesn't matter because the panic is there. When you listen to some health experts that are out there, and I'm sure you've heard some of them, they talk about the potential of 30 to 35 million deaths from the coronavirus with this round. That's a huge number. We're at 4,000, and they're talking 30 to 35 million. Whoa, that's a huge jump, and I know it's very difficult to kind of take our minds and to jump to that and to say, well, that's just not very realistic. But here's the bearish case. Bearish case starts out with, if you have 30 million dead, that means you have how many infected with the coronavirus? What does that mean economically? What does that mean globally? We are already seeing with these numbers right here, 4,000, 66,000 recovered, 120,000 cases. We are seeing countries like Italy basically shutting down. We are seeing businesses in the U.S. with just over 1,000 cases of the coronavirus. We are seeing businesses shutting down. My daughter's school is going to close most likely next week. They've already been preparing for it. Various churches have closed. You're talking about major events getting canceled. How many are going to Disneyland, to Disney World? How many are going to other theme parks, traveling on airplanes? People's activity is starting to be restricted. Now, there's nothing, if the media came out and talked about the flu virus, people wouldn't change their behavior. But this is the COVID-19 coronavirus. It is creating a change of behavior. Here's the problem for investors with that change of behavior. How do you measure the economic impact? How do you measure what the GDP is going to be for the U.S. in the wake of what's going on right now? Can you? You can guess, but can you really measure it? We're seeing a pattern of behavior severely change. People who were looking to go out and buy a new house, are they putting that on hold, or are they going out and house shopping right now? You think about the behavioral changes that we are starting to see take place, and that's with 1,000 cases. Let's say the cases get up to 10,000, which could be by next week. how much of the behavior of the population is going to be changed? So while yes, the coronavirus, we're not talking about a mortal, death rate here that is gonna wipe out half the population. We are talking about something that, as the numbers grow, changes the behavior of people and changes it in a significant way. So from an investor standpoint, how do you measure the economic impact? You really can't. How do you take a company like Apple and say, well, you know what, the coronavirus is doing X, Y, and Z, so it's going to impact Apple in A, B, and C type of manner? Can you do it? Can you trust what the earnings numbers are going to be, what the revenue numbers are going to be? Can you trust what the margins are going to be? Can you trust what what different production's going to be? Because hey, they're having trouble even getting some supplies. You have not only the demand, the demand side changing, but the supply side changing. Investors aren't used to dealing with that, dealing with a supply and demand shift. And so you can't really measure the economic impact yet because things are still getting worse. Behavior is still changing more negatively. You can't measure the earnings and revenue impact for individual companies. So from an investor standpoint, you're left in no man's land. You're absolutely left in no man's land. And so what starts to happen? Investors who say, well, I'm going to weather the storm, eventually they start to hit a little panic phase because they start to go, well, you know what? Maybe there is some teeth. Maybe there are some teeth here to this whole coronavirus thing. Maybe we go significantly lower. Maybe things get a lot worse before they get better. How many people have changed their mindset to that? I would argue very few. I would argue that for the most part, most people are looking at saying, okay, when is it time to buy? You listen to analyst houses, they're talking about when is it going to be time to buy? Not, hey, knock, 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 get out now, or it's too late. That's not what we're hearing from most broker houses. What about the margin calls? We already see dip buyers getting toasted. We've used the analogy of the salty cookie, right? And dip buyers are just absolutely getting toasted. But what about the margin players? Because as we go lower, as the market continues to dip, margin calls become more and more frequent, become more and more powerful, and tougher to deal with. You essentially have to sell more stock in that case. Not only that, but what about the backlash against China? I mean, this all started in Wuhan in a wet market where, let's face it, we already saw SARS virus start in a very similar environment. China had the opportunity to ban this, ban these wet markets. It's not like most of their population even uses the wet markets. It's a market for the rich and powerful, and they have kept it going. So what about the global backlash against China? Because it's not like there's some nebulous wondering, hey, how did this all start? No, this all started because the changes that China committed to make after the SARS virus, they didn't make. And now it is affecting other countries globally to the tune of hundreds of millions of dollars. And for many countries, by the time it's all done and said and done, it'll be billions of dollars of an economic impact, not to count the loss of lives, on something that was very preventable. At least that's how it's going to be viewed when the pressure goes on China. Right now, countries aren't putting a lot of pressure on China. They're just trying to figure out what's going on. How do we prevent this? How do we stop this? They're in emergency mode right now. But when emergency mode is over and backlash mode starts, what does that mean economically? We have one of the biggest economies in the world where countries around the world are going to be looking at them and saying, what are you doing? If you don't make these changes, then we're going to cut off this and we're going to do that and we're going to do that. And in many cases, you could argue we will see countries, basically cut off their nose despite their face. And what does that look like economically? So, in an era right now where we have this virus, we have it impacting the markets in a way that when we see other things go on out there, we can measure the impact. When we see Russia invade Ukraine, we can kind of measure the impact. When we see, a flare up in the Middle East, we can measure the impacts or at least estimate the impacts. Right now, something's going on where the measurement of the impacts is very difficult. And it leaves investors in a position of just who knows? Who knows? The last time we were in a position where the measurables were this much up in the air wasn't the European debt crisis, wasn't Brexit, because the debt crisis, you could measure it. You could measure what the case would be. You could say, hey, you know what? If we do see European Union collapse here or there, boom, this is going to be the impact on the company, and this is how it's going to affect them. And yeah, I have 30% risk to the downside. You could measure it. Right now, can't measure it. The last time we were in a situation where you couldn't measure was back in 2008. 2008 with the basically the demise of Lehman Brothers and the global financial crisis. You take a look, Lehman Brothers collapsed right here. Market jumped shortly after. Market made a big move up. Everyone thought, oh, okay, this is the bad news bottom. This is the worst of it. It's over. Bye. Right? They didn't understand the dominoes that were going to fall from this. And the dominoes fell. And we start seeing the dominoes fall, and we get this first big dip. Broker houses are talking during this, hey, get ready to buy this dip. There's going to be a nice buyable dip, blah, blah, blah. We have all this problem, but look, they're solving it here and here and here. And then look at this rally we get. I mean, it's just a monster rally. 20% rally in 3 days? Almost a 20% rally in 3 days. Okay. People are talking about this week being historically volatile. You talk about a 20% rally in 3 days that gets erased 2 days later. We have not hit global financial crisis volatility yet. But you can see all the ups and the downs and the chop arounds. What starts happening to the dip buyers? They start getting crushed. Right? Then you get this big move up. Okay, things are solved. The Fed has come to the rescue. And, no, here we go down again. Another bump back up. What's going on here? Well, people don't know how to measure the impact. They don't know how to measure the impact of stimulus measures versus the negative economic impacts of what's really unfolding. And so they can say, yeah, stimulus is coming. Great. Bye, bye, bye. But you know what? Stimulus, is it going to help all that much in the face of an economy getting worse? Eventually, what happens? You get into the end of December, into January, you get this sell-off in January. And the dip buyer morale, I just remember, I was trading during this time very aggressively. And, the morale here of investors just kind of seemed to change. Just kind of seemed to be like, I just can't be involved in this. And people with 401ks, people with IRAs, the main public, start looking and going, this has been a bloodbath. I can't hold this anymore. We've had some bounces. They're not really bouncing. I've got to get out. And we started seeing a lot of redemptions come in here with them. And then we hit this period in February where the dip buyers were just gone. And I know we didn't go down every single day, but it seemed like almost every day, market's just down. No new news, nothing different, nothing changed. Just every day, down, 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 down. And some of the most famous people for calling the bottom right here, okay, you go back and look at their calls. They called the bottom right here. They called the bottom right here. They called the bottom right here. They called many bottoms to finally be right. By the time we hit beginning of March, nobody cared about bottom calling anymore because everybody who's calling bottoms, they've already predicted how many bottoms and were wrong. It just, people start tuning it out. This all lasted how long? September, October, November, December, January, February. This was 6 months. So far right now, we are dealing with a market that's had an initial blast down, and we have been dealing with it for what, 2.5 weeks? Is there more to come? The bears will say yes. The case for panic will say yes because the exponential growth of coronavirus outbreak continues to grow. And just like the financial crisis, the unknowns continue to mount. How can you measure the ultimate impact? How can you really say, well, this is going to be the economic impact for Starbucks or for Disney or for Procter & Gamble or for Hershey? How can you measure that economic impact? You simply can't. That is what the bears will argue. How can you measure the impact of the global backlash that will be coming against China? Does that create a situation where you really want to be involved right now? Is that a situation where you want to say, well, you know what? Take a look at Apple, and Apple's earnings are this, and their revenues are this, and their margins are that. The bears are going to say no. Right now, you can't argue the market's cheap. You can't argue that the market is undervalued in any way, shape, or form by almost every valuation metric. The only thing you really have to argue is to go, well, interest rates are non-existent. We no longer have an interest rate. The 10-year is at an all-time low, the interest rate. And so, okay, if we don't have an interest rate, basically, it means the only party in town is stocks, and eventually people are going to have to come back to stocks, and the bears will argue that's what will create the bounces. But ultimately, those will be sold as the general population starts to redeem their IRAs, their 401ks, as they start to get out, as they start to say, I can't deal with that panic. I need to move on. I can't survive it. You look at the population age here in the U.S. and the baby boomer generation, and can they survive a big dip in the market with their savings? Most can't. So they're not going to be able to let it go too deep. They're going to have to redeem a little sooner than later. And some would argue that that hasn't even begun here just yet. Bears can make a pretty decent argument that the market hasn't even started to drop. And if you look, and if you want to compare the coronavirus economic impact to anything historically, it can compare to 2008, 2009, and just in terms of the absolute unknown factor of the markets. Now, ultimately, do I think it gets that bad? No, I don't. I don't. I'm giving you the bear case here. But at the same time, I have to recognize that the case exists and that it is possible. And that there are some very valid points here to it. And that I'm not able to predict what's going to happen. Anybody out there predicting what's going to happen based on past circumstances is not looking at past circumstances correctly. Because what do past circumstances show us? Past circumstances show us that it's incredibly volatile, it's incredibly unpredictable, and it has very different magnitudes and time frames. That's what past history shows us. And so right now, when we have a virus that is new to the markets, that is spreading at an exponential rate, that is changing the behavior of the overall population, how can we go out and predict, well, okay, this is going to end on blah, blah, blah date. Companies are going to have write-downs next quarter, and then the economy is going to get back to normal because everybody's going to go back to their same pattern of behavior, and everything will be all well and good, and things will go to new highs. I think ultimately that's what happens. Ultimately, the market does go to new highs. Like, that's probably the easiest statement that anybody can make ever, right? To say, oh, the market's going to go to new highs. the market always goes to new highs. The market will go to new highs. We will see a new high printed by the market. Is it going to be this year, next year, year after that, 10 years from now, 20 years from now? It'll happen. It always happens. But many times it's it's delayed. And if things get the way they were in 2008, 2009, we could be talking about a 2, 3, 4 year type of recovery period for it. And again, I don't think that's what's going to come on board. I do think there's going to be a political element here that steps in globally, not just here in the U.S., but globally, because yes, we talked about it a couple weeks ago. Global officials can weather a coronavirus dip. They can point, they can blame it on that. And then weeks, months later, they can come in with their Superman capes, enact a policy to change the markets around, to push the markets back up, and now they look like champions. Now they look like heroes, both in China, Europe, in China, Europe, Brazil, the U.S., India, around the world. Countries are going to be able to do this, and I do think that's ultimately what we will see. But how deep do they let it get? And right now I think there's no rush for global officials to step in and to try to stem the tide of the market selling, because they ultimately know that no matter how low it goes, they can blame it on the coronavirus. No matter how low it goes, it's not their fault. And no matter how low it goes, they can enact policy to change it. And when they do, they will look heroic. And that time will come. It's not right here. It's not right here. But that time will come, and that's one of the things that I'm watching for, looking for, to kind of to say, all right, you know what, absolute bottom is in. But, we'll see how it all plays out. I can't sit here and tell you, well, it's going to play out in this manner, in this time frame, because we really have no factual basis for any of that. It's all opinion. It's all speculation. It's all guessing games based on past history. And the reality is, as I've said before, past history shows there's a huge random component here to it. Thanks for hopping on. Have yourselves a fantastic day. I will talk to you tomorrow. Take care.